let's also bring on board Mr. Akshay Bhagwat, Senior Vice President of Derivatives Research at JM Financial. Akshay, thank you for joining us here on News 9. I want to begin by asking your assessment of market, a percent here, a percent there. We have seen a strong recovery in the last session of about 300 points, but the markets have been extremely choppy. So what's your view on Nifty, and can we perhaps, stay above that 21,000 mark?
Good morning, Suyash. Well, if you look at the Nifty index, the January series has lived much to its expectations. Historically, as I mentioned before, January is a month where there is always a high probability of some corrective action. And after the blasting move which you had in the month of November, December, a cool off of momentum was much needed ahead of the budget. Now, really, are we out of the woods or not is the question. Still, the pain can be there in the index because, a couple of days back, we had some technical breakdowns on the Nifty, which was coupled with short additions. Even if you look at the rollover data till yesterday, there was rollover of short bets to the tune of around 65% in the Nifty index. So technically, for some kind of stability to regain, I would look for level of 21,700 at least to stabilize above that. Otherwise, it's just a dead cat bounce, which I look forward to as we had yesterday. And still the downside target still 20,800. This is the possible downside I look forward to as we move into the February series. So that downside is still on. Supports are not yet tested, and it's too early to make an evidence that a possible bottom is under formation. So yes, it's choppy. It's on a slippery turf, and you can see some more selling pressure as we move into the February series.
All right, some more selling pressure expected, and reversal is only expected around the 21,700 mark once the index takes that over. But let's also talk about Nifty Bank, because I was looking at the price charts yesterday. We have in fact corrected about 3,500 points or so from the peak. But I think on the price charts, it looks like we are in the oversold territory. RSI, the relative strength index, at one point was near in the 20s. So can we expect a pullback from here on?
Well, if you look at Bank Nifty and Nifty charts, clearly Bank Nifty has been a laggard here. And for any kind of strength in the broader market structure, it's always, if you look at Bank Nifty takes the lead. Technically, although as you mentioned that it's near an oversold zone, yes it is, but the momentum in Bank Nifty is still positioned on the negative side. So there are short build-ups in the futures and options segment, a lot of call writing which is present around 46,000 as we move into the new series. Short positions have been rolled, and there may be one more leg of downside where you might see Bank Nifty hitting the 44,000 mark. So 44,000 is a very important level for me. That is the area where if it gets to, I will search for some bottom fishing opportunities. As of now, the trend is weak. Yes, there will be some dead cat bounces here and there, but still one should not be too excited to jump the gun and buy Bank Nifty. At least a minimum 46,000 level. That's pretty far from where we are, but that's, if it crosses that level, it sustains above it, that will be the first sign of stability getting back into the bank system. As of now, most of the bank names are weak. HDFC Bank has obviously led this entire mayhem, and we expect the downside further to aggravate as we move into the February series.
Good morning, Akshay. I'll drive your attention to Tata Steel, which announced their Q3 results. And steel companies in general have experienced gains because of a surge in steel prices due to robust demand from substantial infrastructure projects. This has obviously been counterbalanced by an increase in cost of coking coal. Tata Steel has announced a marginal decline in revenue of around 3%, but their profits have jumped back into the black, and they have recorded profits after recording losses the previous year, same quarter the previous year. When I look at the stock today, it is down marginally. What do you make of Tata Steel stock per se for the investors? And steel stocks in general too.
Yeah, good morning, Amit. Broadly, if you look the way the prices have reacted to the results, it's been more like a non-event. Really, markets are not drawing any conclusions from the result as the price movement goes right now. And even if you look at the past 3-4 weeks of trading in Tata Steel, it's more or less, plus minus 5 odd points from the 135 odd mark where we currently trade. So yes, from a broader structure as an investor, yes, the trend is still not disturbed. The support area of 130 here would hold special relevance if you are an investor or you are positioned yourself for the medium term, because till 130 holds in Tata Steel, the trend is strong. It might have its moments where it might be a bit choppy, but still there is room for Tata Steel to aim for the recent swing high till 140. That's the immediate target if you're a short-term trader, and the probability of hitting those look high. Maybe it might do it today, or maybe as we move into the February series. But I will be positioned in Tata Steel still on the buy side of trade, 140 to 145. These are the couple of targets I would be working with on the long side in Tata Steel.
All right, that's a view on Tata Steel. You know, another company that came out with its numbers was Bajaj Auto, and a very healthy set of numbers, you know, with the numbers, at least the results beating streets expectations across all parameters. Net profit, that figure surpassed the 2000 crore mark for the very first time. And talking about the stock, phenomenal set returns and phenomenal wealth creation for investors over the past year. I think it's almost a multi-bagger at this point on a 12-month basis. So the question is simple, can this rally sustain or continue?
Yes, Bajaj Auto definitely has been a multi-bagger. 2023, 2024 has been one of the finest price moves which Bajaj Auto has recorded. And if you look at the last few trading sessions, it's been in a range 7,000 being the base, which is slowly setting up. Technically very firm, a bit overbought for comfort, but still, this momentum is intact in the stock. Numbers are good, though the reaction is a bit tepid here. But I believe the stock has still one more leg of upside left, and possibly 7,600 is where this stock should be aiming for. So yes, as an investor, you continue to hold on. There are no reversal signs as yet. As a trader, maybe it's in the last run of momentum is still on, and you might get this soon as we move into the February series. So 76 is the target I would look forward to. 7,100 is the support area, and you have stops below your support and ride for the next round of momentum where you might see Bajaj Auto heading for 7,600.
Okay, Akshay, apart from this, what are your picks for investors today?
Well, if you're a short-term investor, I have a couple of trades. Majority of them are on the buy side, because still my belief is that stocks the momentum is there to be chased in most of the stocks. So here Maruti, which has been an underperformer in the auto space, I believe that this might be the next stock from the auto space which has underperformed till now in terms of price action. Now this might be the one or the dark horse out of the entire auto pack. I believe there will be a possible reversal in Maruti. So you buy Maruti at the current rate. Technicals and derivative parameters are hinting for a reversal. Target area is which I look forward to is 10,275, and stop loss will be 9,782. Second trade is Motherson Sumi, a very strong technical setup. Yesterday was a fabulous day for Motherson Sumi. Strong long additions for February. Good price structure for the current short-term moment, riding the momentum. Easily 118 is the target which I would look forward to, with a stop loss of 105. And the last recommendation is from the IT space, which is Emphasis. A strong chart structure, a slight consolidation, giving a re-entry near the support area. Long additions. February series is looking good as the IT play will continue. That's my belief. So Emphasis is a buy. Target 2645 with a stop loss of 2507.
All right, those are the top stock picks from Akshay Bhagwat. Akshay, always a pleasure speaking to you. Thank you for joining us here on News 9.